In the last year, PayPal's stock price has gone up by almost 40%. And almost all of those gains come after July 30th, when the company announced earnings where they beat EPS numbers by over 20%. They followed that up with a third quarter of beating EPS numbers by 12%. So now with the company set to announce their earnings on February 4th for the fourth quarter of 2024, the question is, will PayPal be able to continue this run? And that is exactly what we are going to go over in this video. We are going to take a look at their third quarter earnings report, their guidance for Q4, as well as a number of different factors that could contribute to additional run-ups in PayPal's stock price. Thank you guys so much for the continued support. If you want to know the best way to support the channel, it is by simply going down below and dropping a like on this video. It really means a lot to me and it helps promote the video out there. And if you haven't yet subscribed, make sure to hit the subscribe button while you're down there. One thing I try to do to give back to you guys for all of this support is being as transparent as possible about the positions that I hold in the market. This is the YouTube portfolio and it's currently sitting at a value of $58,589.53. And here are the positions that we hold in the portfolio. The one major move that we have made recently is in SMCI, which is Super Microcomputer. We added another 50 shares to this position and now the cost basis is sitting at $6,400. The current market value is $5,600, so we're down around 12%. The stock that we're going to be talking about in this video is PayPal, and I do hold 10 shares of PayPal in this portfolio, up almost 50%. I also hold more shares in my other portfolio, which is much larger. I have a position in that portfolio of around $20,000 to $30,000. So keep in mind, yes, I do have a very small position here, but I do have a much larger position in my other portfolio. And a couple other positions I do hold are SCHD and VYM. These are two dividend ETFs. I also have a sizable cash position because I believe that the market sometime in 2025 is going to experience a 15 to 20% pullback. The stock that we're going to be talking about today is PayPal. So keep in mind that I do hold shares of this company. In the last year, it is up around 40%. However, when we look at the last 5 years, this stock is still down by over 20%. And if you go from its all-time highs of $310 achieved back in 2021, the stock is down by over 70%. Single-handedly, the metric that has the strongest correlation to price is earnings per share. That is why investors pay so close attention to earnings announcements. And PayPal is expected to announce their earnings here on February 4th. Analysts have EPS estimates of $1.12 and revenue estimates of $8.27 billion. And non-GAAP EPS numbers of $1.12 are right in line with the guidance the company provided during the third quarter. They said that non-GAAP EPS numbers would come in between $1.07 and $1.11, while GAAP EPS numbers were estimated to be anywhere from $1.03 to $1.07. However, right now, early indications are that PayPal should be able to come through with top and bottom line beats. When we look across the market, we are seeing some strong indications from other companies that this should be the case. For instance, here we have Meta's earnings. They reported on January 29th, and they came through with EPS numbers that beat analyst expectations by almost 20%. They also beat on the top line by almost 3%. And another company that had very strong earnings this quarter was JP Morgan. They reported back on January 15th, and they came through with EPS numbers that beat analyst expectations by almost 20% and top line revenue numbers that beat expectations by almost 3%. And the reason these two companies' earnings can give us some insight to PayPal has to do with the industries that they're in, right? When you think about PayPal, it is a fintech company. That's financial technology company. So what that means is we can kind of get an insight from JP Morgan about the financial side of the business and where that could be trending for PayPal. And the reason that Meta provides some insight is because when you think about their revenue, it is primarily coming from ad spend. What that means is if they are seeing very strong top line and bottom line numbers, advertisers are likely spending a lot of money out there. And that means they are spending a lot of money to try and promote and sell their products. And if people are selling a lot of products, they are likely selling some of those products at the very least through PayPal. And this has been a big focal point for PayPal as well. They are focused a lot on how they can improve their merchant experiences. If they're able to improve merchant experiences by driving driving more conversions, then there is a lot higher likelihood that these merchants are going to continue and even promote using PayPal as a checkout service. And if they're able to improve merchant experiences, they should start seeing these things impact a lot of their key metrics. One of those being total payment volume. Total payment volume in the third quarter grew by 9% year over year. That is a fairly solid number. Still seeing growth is going to be the important thing for PayPal. I think if they can maintain this number or even get into the double digits, that would be massive for the company. The other key metric that investors have been paying very close attention to over the last couple of years has been transaction margin. That grew 9% year over year in the third quarter. Again, if they can see double digit numbers for this, that would be very impressive for PayPal. One metric that I think investors have gotten a little bit more used to being flat is active accounts. For PayPal, this used to be a very important metric to see it continuing to grow. However, in the most recent quarters, it is basically flattened out. Year over year in the third quarter, it only grew by 1%. I think as long as this number doesn't go down by 2, 3, 4%, or if it goes up by 2, 3, 4%, I think those could be catalysts in either direction. But right now, I just don't think there's going to be a whole lot of growth here. They went through a massive growth cycle in 2020 and 2021 when everyone was using online payments. And I think a lot of that growth got pulled forward into those years, and they're seeing kind of this flattening out over the last couple of years. But again, the most important metric for me is going to be bottom line numbers. Right now, EPS for the trailing 12-month period on a GAAP basis is sitting at $4.19. That is actually fairly close to the all-time high of $4.39 achieved back in 2021. Keep in mind that those numbers are on a GAAP basis. On a non-GAAP basis, we can look at Yahoo Finance, and their estimates are sitting at $4.58 for 2024, and for 2025, that number jumps up to $4.90. And this $4.90 estimate for 2025 results in a forward P ratio around an 18. This is low compared to the broader market. However, compared to PayPal a year ago, it is quite a bit higher because a year ago, PayPal was trading at around a 10 forward P ratio. And that really speaks to why valuation expansion can be important for the stock price of a company. We could see that right now, PayPal is trading around a 20 forward P ratio. If we think that it should be trading in line with the S&P 500, that is anywhere from a 20 to a 25 PE ratio. That would result in a price around $100 to $123 per share, which would be upside anywhere from 11% to almost 40%. In my opinion, I think that PayPal could easily get to this $120 per share. I think that if we start seeing a few things go right for this company, we see their revenue get into the double digits, I think the bottom line is going to expand even quicker. And what that should result in is not only multiple expansion, but also earnings growing at a faster clip than investors are expecting. And that should result in a higher stock price overall. But remember, that is all just my opinion. Don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, did you hear about the archaeologist that got fired? Check the comments down below for the answer. Thanks for watching.